We are there, right? Yes, we are there. Group number 1. I told you in my very first class, say you're gonna go South right now. It's squeezed, right? Does not cover much. So I shared you a number of. I shared you a book where a number of tax stuff are presented, and the presentations I'm giving you, they are from that book. We there, right? So what we'll do is class yathu ndiyo panda projector, so we'll ask anzathu amene ali class ya projector kuti zangopangana swap so that our presentations should be beamed here. So you do have the computer lab there. We also do have personal computers, so we can make presentations and keep them in a flash so that when that day comes, we should be able to make a presentation. And when you are presenting, I don't expect you to read or to be reading from the PowerPoint. When they say PowerPoint, it has to be presented in point form, right? And not necessarily notes given in the PowerPoint presentation, no. So in your presentation, I just need points. So you should be able to interpret the points that you are given. So you make one presentation, they would want to this is okay. In a row yanga ndikabanga is row yanga ndikabanga is row yanga ndikabanga is. So you find with it, despite we are in groups, but individually we do have a responsibility to take, right? All right, thank you. So we go for number 1. Number 1, you take on fringe benefits tax. Fringe benefits tax. Yeah, there, right? Number 2. Number 2, you take value added tax, VAT, value added tax. Number 3, you take provisional tax system. Provisional tax system. Provisional tax system. Provisional tax system. Then we share there again, right? They would 4 5. We share those guys who are just joining us, right? Group number 4 ndio. All right. Number 4, you take us through customs duty. Customs duty. Number 5. What number 5? Mumba and who? All right. You guys, you take us through taxation of passive income. Taxation of passive income. A group leader alibe paid. I would zero NI. Taxation of passive income. That's group number 5, right? We go to group 6. Who are group 6? All right. Group 6, you do as excise tax. EXCISE. EXCISE. Excise tax. All right. If you look at whatever I've given you is from the book that I shared with you. So we need to do our self study and make our PowerPoint presentation from that. And I expect come Friday, group 1 and 2, they are going to do the needful task. Are we there? Ndegudi, team ya Salayo, group 3, 4, you need to get set by 25. Are we there? All right. Ndeudi enakazapanga pa 25. I'll also announce how many so the other. I understand you classes, I mean, you end semester starting on what? 11. Eh, 11 November, right? Yeah? Timberane ngayo. Huh? That's what I heard. Yes. So we are said, right? So let's take the presentations seriously, and I'll give according to what one gives. What? So the effort you show shall determine you you marks. And when we'll be meeting for the last time, I ask you to come and see how much you have done out of 40. I'll be able to give you. Okay? All right. Are we there? Now we go for Zomwezi. Now we start business taxation. Business taxation. Sorry. Business taxation. And under business taxation, why there is no power? Why there is no power? All right. So our focus will be on, we'll start with a sole trader. Who is a sole trader? One individual. Anything you can add on that?
When a person becomes his or
All right. Yes, Mumba. Omianga na nzao wa mbili. What do you have? Nada? Yes, Yasin. So you're right. A sole proprietorship is a business owned by one person. And there is no separation. And there is no separation between, there is no separation of ownership between the owner and the business. And there is no separation of ownership between the owner and the business. So in this case, to those who have done sole proprietorship or sole trader, you would understand, say, they say, when talk of the sole proprietorship business, there are unlimited liabilities, right? You recall this? There are unlimited liabilities, right? What does that mean? What does that mean? Any idea? So what it means is the owner of the business succumbs to everything that the business does. A good example, let's take the business has obtained a loan. It shall be deemed to be, the loan shall be deemed to have been taken by who? By the owner and not the business, right? Like if we are to go to uh, limited companies, you find say we do separate the owner from what? From the business. Say that we do recognize the business as a person on its own. And if such kind of business, let's take they have obtained loan, it shall be said that the loan has been obtained by who? This is here what? Dear Jani, here too. Let's use we are completely lost. So, Neguri, the loan has been taken by the business. Even if, let's take, there has been a failure to repay the loan, Neguri, Enage and Ramazija, they cannot come and get Karundwa Enage company. But they would rather go and grab Karundwanda or company, right? Because company and Enage and Tawirora, Oceana, which is the opposite of this. Are we there? All right, let's see. Determination of taxable income of a sole proprietorship. Determination of taxable income of a sole proprietorship. How do you think we can determine this? Messi? Messi, right? Yes, how can we do it? Tendai. Who is Tendai? And who do you? Tendai. Okay, yes. How can we do? Which shall comprise of what? All right, let's have this. You write in determining the taxable income of a sole proprietorship, in determining the taxable income of a sole proprietorship, the following are taken into consideration. The following are taken into a consideration. Number one, total assessable income of the sole proprietorship, which verse Tendai say it shall comprise of what? Saying total assessable income of the total assessable income of the sole proprietorship. Sindikumva cyane cyane cyane. Ah, who can answer his question? Eh? What's your name, Paj? Margaret. Margaret says it's just the same. Justin, you agree with her? Mumba, you agree with her? Mani mnafusa chonchi? Ananena trade ilu. Gertrude, you're the one. Gertrude is here. Uh-huh. You agree with him?
I'm not trading.
Yes. The first one.
Trade and proprietorship is the same.
Trade.
All right, let's not waste time. We talk, in this case, we talk of business, right? And if you look at business, business would be done in a number of forms, right? And among the forms of business, one of it is what? Sole proprietorship. Mwamvaji. Yes. So the Gamagamba sole proprietorship, we are just talking about a particular form of a business. There are also partnerships and others, right? Yes. All right, so first of all, we said we need to determine what? Total assessable income. Second, total allowable deductions of the sole proprietorship. Are we there? Are we there? Total allowable deductions. Total allowable deductions of the sole proprietorship. What did I say about allowable deductions? Yes, Mark. What did I say? Yes. Yes, Messi. Hmm? There. Uh-huh. All right. Yes, man there. Mateo, what's your comment on allowable deductions? So you write, therefore, you skip a line and you write, therefore, the taxable profit of the sole proprietorship, therefore, the taxable profit of the sole proprietorship will be, so you write an equation where you write taxable income is equal to, taxable income is equal to, are we there? Taxable income is equal to assessable income minus allowable deductions. Minus allowable deductions. Are we there? I'm saying taxable income is equal to assessable income minus what? Allowable deductions. So if you recall, I did say, when talk of allowable deductions, we are looking at the amounts of expenses that have helped us to generate the income, right? So definitely we need to find out, say, as a sole proprietor, what is it that they do that would help them to make the money that they have generated, right? Have you done accounting? Eh? Linda? Ina wanamba kuona pano kwa Kaligari. Akamani Linda yetu. Justin, Linda. Likewise Yasin. Yeye tu? Have we done accounting? All of us, right? Financial accounting, yeah. All of us, right? And then we're on a better position. All right, now let's go. You write assessable income. So you write, this is the total amount in cash. This is the total amount in cash. This is the total amount in cash. This is the total amount in cash, or otherwise including capital gains received, or including capital gains received, including capital gains received by, comma, accrued to, or in favor of. Accrued, spelling here, you did accounting from accrual, that is ACC. Accrual, accrued to, or in favor of a person, in favor of a person in any year, in any year, in any year, excluding the amount exempted, excluding the amount exempted from tax, excluding the amount exempted. And these incomes may include, one, operating revenue, you're there, right? Number two, passive income, passive income, passive income. Three, capital gains. Three, realized, that's number four rather, realized foreign exchange gains, realized foreign exchange gains, realized, zobezega, realized, spelling, realized foreign exchange gains, and bad dates, recovered. Of those amounts that I've included there, with the knowledge that we have from accounting or from financial accounting, what are the things that we know there? What are those things? Yes? Anyone? Yes, Ketwife. Loveness. Who is Loveness? Yes, Loveness. Tell us. Sorry? Yes, what are the? Mhm. Exactly. So you look at the money that you probably thought you have lost just because those to whom you sold on credit, they have not given you, right? Now you have gotten that money. So it is an income, right? Seriously. So you can just be imagining yourself, you know, it's a business. And from the business, what is it that you are what? You are earning. That's what we are looking at here. So bad dates, we have failed to get from the customer. But if these customers, they have given us, now we have the income, right? So that's it. So bad debts recovered. Yes, Mumba. Anything that you capital gains. What are capital gains? On that accounting. Get rid. Eh? No, I didn't say in your accounting. You have learned accounting, right? Yes, that's what I'm looking. I'm not necessarily looking for those who are doing accounting. Capital gains. So capital gains, let's take the business has got assets. I do believe you learn in accounting to say assets, they do depreciate, right? So if assets have been sold at a higher price than their book value, there is a gain, right? And that gain is what we call the capital gain. So if such kind of things have happened, they already know you have gained money, which is an income to the sole proprietor. Are we there? What else have we written there? Passive income. What is passive income? An idea? Linda? Yes. I thought you were saying yes. Yes, Linda. Any idea what passive income would be? Yes, brother. So passive income, like in as far as this is concerned, the talk of the sole proprietor or the sole trader, we look at the income that this guy may be having that is not directly related to what business he is doing. You get what I mean? Brother, there, you have gotten what I meant, right? Yes, tell me. All right. What I meant is, last time somebody was saying, was it Mandasi? Yeah, Samosa. That's a business. That's sole proprietorship business, right? Then let's take here our Bizandrama. You said you get a Samosa, right? That's the passive income. You understand it? Money that is coming from something else, not what that, yes, not from the business that that person is doing. Are you there? So it is an income. What else? What else have we written there? Operating income. Very true. What revenue, right? Yes, operating income, operating revenue is just one thing. You really did accounting? I doubt. Yeah? Last year, Nigale, Moiwa, Inamene. So we talk of operating revenue or income, we are talking of nothing but what? The profit that the business has earned. See, so you find that the moment you're running your business, the aim is to make the profit. So the profit earned, that's what we are talking about there. What else? We also looked at what? Realized foreign exchange gain. What are these? An idea? Yes, brother there. Mwasamuga which for ya? All right. What are foreign exchange gains? Uh, Koma yankhula bafubira bezeke. Yes, my brother there. Foreign exchange gain. Eh? Anapanga. And this is not from accounting. You can even understand it from just the general. Chinula, what are foreign exchange gain? No idea. Yes, my brother there. Eh? Where is it? Ndada. Zamenyedwa zazi. All right. So what we look at here is you look at the benefit or the gain that this sole trader could have just because they have changed their money from their local currency to another currency. Do you think that is possible? How is it possible? Yes, Mumba. Yes, brother. You didn't do accounting. Yes. Where is that somewhere? Yes, bro. What would be foreign exchange gains from what I've just said?
It's more like the income actually in domestic currency.
So I wanted an example.
More like in Malawi here there was a valuation. So for those that maybe the money maybe accounts maybe they keep in another country change. Allowing currency to be
All right. Let's see. How much is one kwaja to land? For example, Tirengeno like Tanzanian shilling, right? One kwacha is equivalent to 1.05 shillings. You understand it, right? Whereas if you are to buy, if you look at our kwacha to a dollar, it's about 1.7, right? Are you following? Whereas if you look at Tanzanian shilling to a dollar, is 2.5, I think. You understand it? So let's take you have Malayan kwacha, right? And you'd like to have Tanzanian shillings. You find that if you are to buy Tanzanian shillings with your kwacha, you get less money than if you change dollar into Tanzanian shillings, right? So if you'd like to have, in business we call arbitrage advantage. If you'd like to gain, one would wish to look for dollars so that they can buy dollars using their kwacha, right? And later on, use the dollars to buy what? The Tanzanian shilling. That you find with muga kandi ma shillings zochulukira apo kwambiri. Then if you are to take your kwacha and buy direct what? Shillings. I don't know if it's uvega. Eh? Zaro masamu. So you find it in that way. Building mwabeza pindu zochulukira apo. So that is the foreign exchange gain. The also says Tienera Gazbanga included as part of the income that the sole proprietor is having. Let's see, we proceed. Let's look at assessable income who exclude the following. You write assessable income we exclude the following. That is, we look at things that should not be included in what? In the assessable income. Number one. Number one, you look at dividends. Number one, on top of dividends. So there, dividends shall not be included in the assessable income. Here they're saying because they are subject to a final withholding tax. Now I'm just explaining. The rest you can get it in the manual. Dividends. Yes, you know what they are? Him. You don't know. You did accounting? All right. Yes, Justin. What are they? What are they? Munibalalis. My profits. What he's saying does make sense. To him, what he's saying is 100% true, but the presentation is not fine. Anyone would refine what he's saying? Mateo, what are dividends? All right. So dividends, these are the monies that are paid to the owners of the company. And these monies, they do come from the profit of the business. Are we there? The number? I just what was in his mind. It was very true. Yeah, of course. Anything? Then you write profit on disposal of non-current assets. Profits on disposal of non-current assets because they are calculated based on depreciation. Because they are calculated based on depreciation, which is not an allowable is your still sleeping? Sada? Amada? All right, I was saying which is not an allowable deduction for tax purposes. What are non-current assets from accounting? Oh, that was gone. No, I'll use my phone. I already did. I said, Chinua, you can share the notes with him. All right, we there, right? Then now we say not dispose of uh, non-current assets. So non-current assets are what? What are they?
Resources,
In the form of,
not,
in form of,
they cannot be converted into cash.
they are not be converted into cash. Yes, very true. So what we are focusing on is we are focusing on fixed assets. Are we there? The focus is on fixed assets. So there, the other one you have exempt income as per Taxation Act, exempt income. So in this case, you look at there are some incomes that specifically it is a requirement that they should not be what? They should not be taxed. So those amounts should not be included in the assessable income. Then later on, we also have unrealized foreign exchange gains. Unrealized foreign exchange gains. Unrealized foreign exchange gains. What are these? Yes, Ajimwene there. What are unrealized foreign exchange gains? Any?
And that's foreign exchange gains
Would be what?
would be the income that you managed to gain.
Exactly. So you got sometimes you may have that feeling to say by we call what speculations. So maybe due to changes in the currency or in the exchange rate, we are likely to gain so much through exchange rates. That amount has not yet been earned, so you cannot include there. Then let's go for allowable deductions. Allowable deductions. So you write determining allowable deductions. Determining allowable deductions. And on determining allowable deductions, what we have the general rule. So you write in determining taxable income of a taxpayer, in determining taxable income of taxpayer, there shall be deductions. There shall be deductions. Should be there shall be deducted, not deduction, deducted from the assessable income of such taxpayer. There shall be deducted from the assessable income of such taxpayer the amount of any expenditure or losses, the amount of expenditure or losses wholly. I'm saying any expenditure or losses wholly. That's WHOLLY, wholly comma, exclusively and necessarily incurred, exclusively or necessarily incurred by the taxpayer for the purpose of his trade or in the production of the income. What does that mean? Are saying incurred by the taxpayer for the purpose of his trade or in the production of the income or in the production of the income. What does that mean? You agree with what I said last time. I said when talk of the the allowable deductions, we are looking at all those expenses that have contributed to the amount of income we have earned, right? So if you look at this sole proprietorship, he or she does business, right? So we would say from the amount that they have earned, what has contributed there. So all we'll be using is, we use the knowledge from the accounting, where we look at the income statement. Do you remember the income statement as you read? What are the things that are there? Sorry? Uh,
Is assets, current assets, current assets.
are you sure? Income statement. What are the things that are contained there? Uh-huh. Operating expenses. Uh, so when you get out, you also need to train yourself. Muzivase ntawe mugabange revise income statement. Because here our work when it comes to solving, our task will be to readjust the income statement so that we understand what is to be deducted or not, so that we come up with the exact amount where tax has to apply. So the income statement, definitely we do have sales, cost of sales, and other operating expenses. All right? Are we there? You did accounting, right? Mwewa study pass forget. So ziwa. Ugatera ya ulonda ndiye uzika business account. Eh? All right. Are we there? So in this case, you find if we look at any business, there shall be no income other than from what? Sales. The school fees you're paying shall be regarded as what? The sales. Are we there? All right. Now, let's look at specific rules. Specific rules. So we talk of specific rules applied to what? Those deductible expenses or allowable expenses. Our first thing is repairs. Repairs. And under repairs, you write this: repairs of a revenue nature. Repairs of a revenue nature are allowable. Yes, sir. All right, we are on repairs. So they're saying repairs of revenue nature are allowable. Those of capital nature are not. Now let's see there. So in this case, what we are focusing on is nothing but understanding revenue expenditure as well as capital expenditure. In this case, when talk of revenue, I mean repairs of revenue nature, we are looking at if any repair, in this case, a good understanding would be looking at maintenance costs, right? Those are repairs. So if the repair that has been done is revenue in nature or is helping to sustain or to maintain day-to-day operations of the business, that means that becomes what? Deductible or allowable. Are you making sense out of it? We need to follow because these are mathematics at the end. If have you learned of revenue and capital expenditures? You have done these in accounting, right? What are they? Why have we shifted here? No, come back. You've been disturbing your friend. Will you come back, please? Yeah. What are revenue and capital expenditures from our accounting knowledge? You see? Revenue. You agree with him? Income expenditure indeed. Mfuna kugwa? Mfuna kugwa? Alright, timanena kuti revenue expenditure, the expenditure imene imapangisa kuti business zikhalapo, right? Day to day sustainability. Why capital expenditure talk of the buying of the assets, right? So when you say revenue or I mean repair of revenue nature, a good example, let's look at this room, right? You see, let's take ceiling has fallen down. Can we be here? We may not be here, right? We need to bring it back so that the place is conducive, right? Likewise, let's take Tadisa or Tapanya my desk. We may not be here because we don't have desks that can help us to be here. These need to be maintained. So such kind of stuff, the moment we know this repair is contributing to day-to-day operations of the business, then that becomes what? Is allowable. We there, right? So you can know this allowable. What do we need? What do we do? We need to take it off from the amount from the assessable income. Are you following, sir? Eh? Eh? Muriani? Muri mwina, muri bawiri no. James. Yes, please. Any, for example, my sister there, sister there, sister there, there, him. I shared all these notes. So you can only use your phone for WhatsApp. All right. Tipitirize. Are we there? Tirimodzi. Then from there we go forward. Capital allowances.